Welcome, ladies and gentlemen. If you look over here on my live account, $4,275 profit in one trading session. That puts me up over $10,000 on the week. That's 1 week. So first week of the month. I'm going to show you in this video exactly how I did that. I used a method called scalping. However, the way that I approach scalping, it's completely different to any type of scalping you've probably seen on this channel. Now, what I mean by that is you've probably been told you just need to learn one special pattern and all this money will come from the sky and you'll be relaxing for the rest of your life. Now, obviously, I assume you live on planet Earth like I do, and you probably realize that that is not going to happen. There's several factors that go into being able to make this sort of money on a regular basis, and those are the factors I'm going to take you through. I'm not saying it's particularly complicated. It doesn't have to be 20 factors, but there's more than one. Okay, so we're looking for at least, I would say, 3 to 4 factors, and sensible factors. Okay, not any wishy-washy stuff, something sensible. So let's go through some of those factors together. We can get on the charts, we can have a look at in terms of execution where I got in. You can see that right here, exactly where I got in, and I can explain some of that. However, first, let's have a look at some of the typical factors institutional traders are looking at. So here I've got 3 key data points or factors that you're not necessarily seeing on a chart, but can you see how useful they are? I did tell you I approach scalping slightly differently. So we can see yesterday was the worst day since June 2020. So you can see that here, this kind of minus 5% on the day, and then over here as well, minus 5%. So is the biggest kind of drop in a single day we've had since June 2020. So that's obviously quite negative. We then had, quite interesting, the employment report. I know we had Trump tariffs, and we're going to talk about that in a second, but we had the employment report and it was very positive, right? It was beat expectations, 228,000 new jobs added. However, the market reacted negatively, right? And I'm not saying it necessarily reacted negatively to this news, but there was other stuff going on. It basically ignored it. So the fact that a positive piece of news was ignored is actually a negative thing. So that's 2 negative factors so far. And then finally, Trump announced his tariffs. So we all know that he announced them, but did you look at the kind of extent of them? And we can see them here. So, countries like China obviously particularly hit with 54%. And that's kind of the biggest trading partner, one of the biggest trading partners we know, in terms of, obviously, China exports a lot, America imports a lot. So it suddenly could feed inflation into the system and also impact growth as well. So a very negative factor. And then also China retaliated, didn't it, by saying we're also going to apply similar types of tariffs, I think above 30% the other way. So 3 negative factors out of 4 or 5 that we're looking for. Do you remember I said we're looking for 4 to 5 factors? So already we found 3, and these are available publicly. They're completely free. Let's go and have a look at the final 2. So it doesn't really matter what platform you're using. I've got TradingView here on the right. I've got my own personal platform, Sierra Chart on the left. One of the factors to look for is compared to the day before. You can see here we've got volume profile, which is just telling us how many transactions took place on the day before. Okay, we can actually see coming into, apologies for the writing, it's not particularly neat, but coming into the day that I'm actually looking to trade, which is this day. So this is actually this area here. The day that I'm looking to trade, can you see? Sellers are totally in control. Okay, I don't need any patterns or anything to tell me that. I can see that visually. Sellers are obviously in control. So out of the sort of 4 or 5 factors I'm looking for, we've already 1, 2, 3, 4, right? We had 3 before, and this is the 4th factor. Now we can look for the 5th factor. What are sellers actually doing in the moment? Now for this, I've brought over the footprint chart. So kind of around this area here, just before I get short. And what I want you to look at is just what the sellers are doing down here at the bottom. And very, very simple. If we just scroll along, can you see selling, 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 selling? little bit of buying right here at the bottom. In fact, let me just move this up a little bit. And then again, selling, 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 slight relief. Selling, 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 selling. And then you can see where I've got short. Slight relief. Selling, 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 selling. Right. I mean, it's just persistent. Okay, so there's your 5 factors. All negative. Why would you even think about buying? Okay, so that's kind of got me in short there. So 5 out of 5 factors. So just final point I wanted to make is that you don't necessarily need to use the same 5 factors I'm using. My point is there's no one pattern, okay, that is going to magically make you money. If you think that's the case, trading's not the right business for you. But I think most of you watching this, you recognize that, and therefore probably trading is something you can be successful at. You just obviously need to make sure that you're approaching it without shortcuts. And to do that, you can check out this video here, which is going to continue to help you kind of find what those factors are for you, those multiple factors. See you in the next video.